Good morning, traders. This is Frank Cholly with RJO Futures coming to you on Thursday morning, December 6th, with your grain market morning commentary. Currently, we have corn trading 2 to 4 cents lower, soybeans 10 to 12 cents higher, and wheat is steady, trading maybe 1 or 2 better, but mostly steady. Outside markets, crude's down like $1.35, gold's down $4 or $5, equity's a little lower. The dollar's up, the treasuries are up. Those are the two safe havens, so it's a bit of a risk off, but things are really shaping up, especially in the soybeans. These grain markets we've been talking about, corn real steady around that 750 area. Soybeans starting to break out now to the upside. We were talking about 1450, 1460 area the other day on a closing basis. That gets more bullish, at least technically. And nothing's changed fundamentally. But what we are seeing is that today's weekly export sales, 1.1 million metric tons of soybeans sold. And the idea that China is going to continue, at least through the remainder of this year, to continue to buy soybeans from the U.S. So again, I just want to reiterate how important it is to, markets go through corrections, big technical corrections. A lot of times these things are overdone. They're overdone both ways. They get overbought, they get oversold. But at some point, at least in my opinion, it's going to be necessary, especially for soybeans, for prices to move higher. Demand has been very strong. In fact, at this point, we're about 3 months into the current marketing year, and we've already sold over 77% of what the USDA estimated for the entire year. So we're moving at a very rapid pace of sales here, and I don't think it can continue without prices moving higher at some point. That's the function of the market is, prices go higher to ration demand so that we don't run out. We need to be able to carry some over from one year to the next. So the technicals really look good now. The soybean chart, things are starting to break out. I'd be very surprised if we don't test $15 very soon. It's not a stretch anymore. It's 10, 12 cents away from where we are right now. So that's my next level to look for in the January soybeans. Corn, just, again, it's content to hang around 750, 755. We might go down to 730. We might go to 775. But for the most part, I'd expect corn to remain in this tight range because, once again, very disappointing weekly export sales. We haven't seen the demand there yet. It was just a measly 51,000 metric tons. So the demand, at least on the global scale, isn't there for the corn just yet, but corn prices are reluctant to go lower also. So that tells you that at some point, the market, the traders, expect that corn prices will move higher too. In fact, there's not much attention given to a drought during the winter, but look, things are dry, and winter wheat reflects that dryness. That's why those prices hold steady. It's at the lower end of a channel in the wheat, and I expect prices to move higher there too. But bottom line is, we're a long way from being out of a drought, and if this dryness continues through the winter and into the spring, grain prices have to move higher. So that's all I have time for now. Please feel free to give me a call, 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.